The name of this particular webinar is Passive Income with Crypto. And I'm going to cover a lot of things today, and I'm going to have to like kind of shotgun through some things. But what I'm going to do is I'm going to try to focus on the core concepts that are really important, and hopefully spark your mind and have you look at crypto in a whole different way from a passive income standpoint, as opposed to, you know, some guy that's sitting in the basement somewhere in somebody's at his parents' house. So the thing about it is this crypto thing is real, and this crypto thing is making people rich. So you know what, with that, let's just get into it. First things first, I got to hit you with this disclaimer, because this is a risky asset class. So nothing that I'm saying constitutes an investment in any way, shape, or form. This is just for entertainment and informational purposes only. So you're not gonna hold me or Freeman Equity or anybody I know liable for anything that you hear during this webinar. And like with anything in life, don't believe some random guy that's talking about crypto or stocks or anything else. Do your own due diligence. I cannot stress that enough. Okay, now let's get into it. As part of this presentation, we have some rules, like at least some rules that I have, that I'm gonna require that you guys adhere to and agree to. Number one, first and foremost, do not invest money in crypto that you need. So if you need money for your rent, or little Johnny's college fund, or your car payment, crypto is not the asset class for that kind of investing. Next, do your own research. You know, everybody's got their cousin or brother-in-law or uncle that has some hot tip. Do yourself a favor, do your own research. A lot of times it may be hot when they get it, but by the time it gets to you, it is completely cold and you end up losing money. We're going to talk about losing money too in a minute. Okay, do yourself a favor, even if you're not technical, make sure you read the white paper for these protocols and for these projects. I cannot stress that enough. A lot of times they're boring as hell. I'm not going to even lie to you. Really boring. But think about it this way. You're putting your hard-earned money into these projects. You should at least understand not only the rewards, but the risk behind them. Next, these markets are completely unregulated, which means somebody could rip you off, and chances are you're not going to have a whole lot you can be able to do about it. So you got to keep that in mind as part of your overall investment thesis. And then lastly, you can lose all your damn money. Just you have to, if you can't accept that, then you should probably just drop off the call right now, because it theoretically could happen. So not trying to scare you, but what I'm trying to do is give you a healthy respect for crypto and what's possible. So let's get into it. Okay, about me, Marco, like I was saying, first and foremost, I'm a software engineering manager at Apple still. I still enjoy writing code, but you know that time is quickly going away. You see the picture of me and my son on the right. We're both black belts in Brazilian Jiu-Jitsu. I'm extremely proud of that. It's one of the things I'm most proud about in my life. Next, you see me holding two big ass stripers, and that's because I'm an expert fisherman. I'm a better fisherman than anybody you know, just so you know. Lastly, I'm a options and crypto trader, as well as a multifamily syndicator. As Marco mentioned earlier, I'm in not only Jake and Gino, but the MIH Mastermind. If you're interested in learning about investing and buying multifamily real estate, there's no better mastermind on the planet, period. And I'm saying that because I'm extremely biased, but I mean it. So, okay, let's get into it. Okay, so here's the agenda. First and foremost, we're going to talk about core concepts and key terms, just some things you need to really understand in order for everything else to kind of make sense. So we're going to talk about what DeFi actually is. And this is a huge topic. Matter of fact, just this topic alone is hours of content around what DeFi actually is. But I'm going to give you kind of a broad explanation, and then we're going to talk about some different types of DeFi. And then we're going to talk about specific examples, projects, and protocols. I'm going to talk about, and you see it in red, I'm going to talk about rug pulls, and impermanent loss, these things are real. Like, I'm letting you know right now, I cannot stress this enough. And we're going to talk about what that means in just a second. Part of why you came is the crypto wallets. So I'm going to talk about crypto wallets, and then we'll set up Metamask, super easy. And then from there, what we're going to do is we're going to look at a couple of people are coming in, a couple of protocols that I actively invest
Travis,
in.
hold on one sec. For the people that are new here, crypto wallets is really important because I use Coinbase, which when I started, John Beatty got me on Coinbase for beginners, and then now John is setting up my wallets for me. As now I have I made about 100,000 in profits from John Beatty. He taught me how to trade back in the day, which would have been more if I wasn't scared. Now I'm educated, and now my legacy portfolio for my kids is at about 200,000. Now he's going to show me about wallets. Go ahead, Travis. I'm sorry.
I still see my screen, right?
Yeah, I'll keep you. I'll tell you if I can. I'll try.
Okay. All right. So let's get into it. First things first. Let's talk about blockchain. What blockchain actually is. This topic in and of itself could be an entire presentation, but I'm going to give you kind of the high level Cliff Notes version of what the blockchain actually is. The blockchain is a distributed ledger. Think of it that way, where what happens is you have multiple peer network nodes that actually validate transactions that get written to this ledger. And because this is distributed across multiple machines across the entire globe, it makes these transactions immutable, meaning they cannot be changed after they're created. So this is like a very high level description of what blockchain is, but in essence, blockchain is just that. Blockchain is distributed and blockchain is immutable. Okay, next, I'm going to talk about smart contracts and what smart contracts are and why they are important. You can think of smart contracts as just code, but it's the rules for engagement or how you agree to do if then else. So in some of the particular cases that you see here for flash loans, insurance, token switching, and buying and selling crypto, what happens is in code, it makes these transactions trustless. I don't need to trust Nico that he's going to give me the crypto that I'm buying from him because the smart contract automatically enforces that. So we're going to talk about exchanges, and we're also going to talk about lending and borrowing platforms, but they all are based upon this smart contract paradigm. And what they do is they leverage specific code to implement specific functions in those smart contracts. And the big thing is, like I said earlier, is the blockchain makes them immutable. And that means you don't have to necessarily worry about one party or another not doing what they're supposed to do because it's all written in code. There's really no room for interpretation. And the other thing I want to point out as it relates to smart contracts is the fact that these transactions are automated as well, right? So these things can happen instantaneous. So imagine, I can imagine very soon where title searches and deeds actually transfer for real estate based on smart contracts. That is coming. It's really just a matter of time for the world to actually catch up with what's possible with smart contracts. Okay, lastly, I'm gonna talk about in kind of the core concepts, this idea of coins versus tokens. You hear them both used kind of interchangeably, but they are definitely different. Coins are primarily a store of value or used for actually purchasing something, and they're normally native to that particular blockchain. So for instance, Bitcoin is native for its blockchain. Ethereum is native for its blockchain. Solana, Avalanche, many others are native for their specific blockchain. However, tokens work differently, and tokens are newer than Bitcoin. And the basis of them, most tokens originated with Ethereum in ERC20. So what happens is a token actually sits on top of a specific blockchain that is smart contract enabled. So every token that you see that is not a specific native coin is just that, it's a token, right? So it's a smart contract that exists on top of a specific blockchain. So some examples that you'll see are utility tokens, transaction tokens, governance tokens, which happen a lot. And governance tokens actually tie into what I'm going to talk about a little bit later, and that's decentralized autonomous organizations. I'm going to talk about that in a second. And last but not least, the one that everybody is crazy about, and that's pictures of monkeys and stuff like that, and that's NFTs. People are making astronomical amounts of money. I'm not, because I don't really understand how, really. But you know, I buy NFTs and some of them go up and some of them don't. So it really is kind of hit and miss for me, but for some people, NFTs very lucrative. Okay, let's move on. Oh, there we go. Okay, so what exactly is DeFi? Like, you hear this term a lot, and you know, in crypto, and now you're even hearing it on CNBC. So let's talk about what DeFi actually is. So DeFi is short for decentralized finance. So think about it this way: anything that you can do via a normal financial institution, you can do via DeFi. The difference is you have the blockchain as the ledger for these transactions, so you completely remove central banks and financial institutions, brokerages and exchanges out of the mix. And the thing about it is there is so much fees that are injected into that process. That's how these huge banks and exchanges stay in business. So with DeFi, you become your own exchange, you become your own bank in a lot of cases. So these are some use cases for DeFi, and I'm going to touch on some of them. Lending and borrowing and DEXs are probably the two largest, although some of the others are also really important. Specifically yield farming and stablecoins. There are a lot of folks that just invest in stablecoins and just yield farm based on purchasing stablecoins. Oh, and let me give you a little bit of background. Stablecoins are coins that are pegged to currency, typically pegged to the US dollar. And what that means is normally like DAI, USDC, or USDT. One of those is supposed to be equal to $1. Typically. So what that gives you is the ability to actually exchange from one crypto to another in a stable currency for exchange. So, and like I said, some people actually invest in nothing but stable coins. It's a safer option, although none of these options are, I mean, nothing in investing is 100% safe. And we all know that, right? So that's the thing. All right, so let's get into it. So how is DeFi different from traditional finance? Big thing is you hold your own money. You don't have your money at the bank. You don't have Wells Fargo telling you you can only pull out $10,000. And if you want to send $1 million, nobody is there to stop you. So you also have control over what you pay to actually transfer money. So since you don't have these intermediaries in place, a lot of these transfers can happen in minutes and seconds, even depending on the protocol that you're on. And the other thing is technically they're supposed to be anonymous. They're not really. Somebody that is really dedicated to like tracking these transactions theoretically could, but it's very difficult. The other thing that I really like about DeFi is that the markets are open 24 hours a day, 7 days a week. So as a multifamily syndicator, I raise capital. It's very, like, if you need somebody to wire money, you need that to happen during business hours, Monday through Friday. So imagine a scenario where you are engaging investors and they can now just transfer crypto as their investment, as opposed to having to go through that process and spend the $30 to $50 for wiring funds. I mean, that would be amazing. I don't know if you've ever had to work with an investor to wire funds, but it can be a very daunting process, I assure you. Okay, so let's get into what DeFi, oh, we got somebody, my boy Yusuf trying to get in. Okay, what DeFi actually is and some examples of it. So these are three of the largest DeFi protocols. Maker, Uniswap, which is also a DEX, and Compound. Oh, here we go. But before we jump into that, let's talk about, there are different DeFi products that kind of occupy different DeFi spaces. So the way I'm categorizing them are truly non-custodial versus custodial. So for example, if we're talking about wallets like your Coinbase or your Binance or crypto.com, those are custodial wallets. And I'm going to talk about wallets in just a second. But the thing about it is those wallets are not, they're yours, but the private keys are held by these companies, which is good and bad. I'm going to talk about why that is good and bad in a second. Then you have the decentralized non-custodial. So these are things that you actually either run on your phone or your laptop or even hardware, right? Those are under your control, but there's also risk associated with it. Okay, and then we talk about kind of yield seeking or lending and saving. Some of you are familiar, some of you aren't. I'm sure some of you have heard of like BlockFi and Celsius. Those are really good kind of starter entry protocols to get involved with. You won't make the best return on your crypto, but it's a more stable vehicle for a lot of people, and I completely understand that. Like I said, your returns will probably be half of what they would be if you invested in a decentralized non-custodial yield platform. But you know, for some people, they feel more comfortable with that, and that's fine. And then lastly, we'll talk about kind of what trading protocols look like. And as I mentioned before, you got Gemini, Coinbase, Binance. There's a bunch of them. Robinhood, Webull. All of those are essentially companies that are providing this exchange and liquidity for you. But for that, they're taking their exorbitant fees. Or what you can do is go decentralized with Uniswap, PancakeSwap, and there's a litany of others. We'll talk about them in a second. And that gives you the ultimate control, but there's also risk in those as well. All right, let's keep it going.
Travis, hold on, hold your train of thought. I want to say something because you're going to forget because you're really dialed into this right now. So guys, if for the beginners on there, there's beginner, medium, high level people here. The beginners right now, what they're saying, there's a few beginners out there going, whoa, this is really complicated. And you get discouraged. So the beginner, you don't do this on your own. You know what you do? At the end, just in case he forgets, you reach out to Travis. You set up a call. He does this. And you do it with somebody like him. So in the mastermind, we don't do the shiny objects. If Marco doesn't go trade crypto by himself, I have a crypto chat. We keep it at under 100. John Beatty, Joshua Stahl, Travis is on there. John Beatty goes, hey, Ether's on discount. Just hint, hint. I call John Beatty up. He goes, yeah, I just dropped 100K onto it. Marco buys 20,000 of it. Okay. So we do like a little, you know, it's like helping each other out. And he doesn't tell me to because it's my money. And he just says what he did. He's like, well, Marco, I'm doing this tomorrow. So that's what Travis also can help and, you know, walk you along. And in your beginner, you don't want to be trading crypto by yourself. You want to be surrounded by it. Success leaves clues. So go ahead, Travis. At the end, you need to leave all your information. You hope you don't forget. I'll remind you.
No, don't you worry.
Okay.
I got this. Okay, so MakerDAO is an example of essentially a decentralized bank for all intents and purposes. You're able to get a return by purchasing that stable coin that I mentioned earlier, DAI, based upon staking, or you can think of staking as putting your crypto into the bank. I think it's a pretty apt analogy. And for doing that, you get a return based upon what the protocol specifies. So in this particular case, $1, as I mentioned before, equals one DAI or one ERC. And as the thing about crypto is the markets are volatile. So if you're looking for a more stabilized return, this may be a method for you. You won't see the biggest returns, but once again, you know, the chances of you losing all your money are dramatically reduced. Okay. One of the things I wanted to talk about, and I spoke about it earlier, is this concept of a DEX. And what a DEX is a decentralized exchange. you know, when you go to the airport in a foreign country, how you can change out your dollars for pesos or yen or wherever you are. And that exchange company takes a fee for doing that exchange. Well, it works similarly, but differently on the blockchain. So what happens is you have protocols like Uniswap that will allow you to actually transact your whatever token for DAI or ETH or BTC. They provide what's called the liquidity, or they're there to say, hey, you have some random off-brand token that you want to sell and get actual, quote unquote, actual crypto for. Great, bring it here. We'll do the exchange for you. But here's the thing that's interesting. These exchanges don't have all the liquidity themselves. So what they do is they partner with individual crypto holders and they say, hey, check it out. You got 100 Ethereum, or you got 100 BTC, or you got 100 DAI. Cool, give that to us. Let us hold it. We're going to use it for actually exchanging. And for you letting us hold it, we'll give you a percent of what we make in exchange fees. That, in effect, is what these decentralized exchanges actually do, right? Now, imagine if your bank doesn't do this. It used to kind of do it, but now with interest rates, you know, at next to nothing, in effect, you don't have that ability with a traditional financial company anymore, or at least a bank. But with decentralized exchanges, you do. And your rate of return is going to be based upon how risky the underlying token that you're actually providing liquidity for actually is. So let's say if you had, I'll give you one, Time, which is Time Wonderland. This is a project that has pulled back dramatically in the past week or so. But let's say you had it, right? Great. They would pay you 5 times the return for providing liquidity with Time than they would for Bitcoin, because Bitcoin's a lot more stable. Bitcoin is, I mean, it moves, but not nearly as much as some of these other tokens. So that's what these decentralized exchanges provide, is the ability for you to actually stake in crypto and get a return from that. So, and there's a bunch of them, but you know, there's Uniswap, there's Sushi Swap, there's Pancake Swap. And I know these names are a little cheesy, but you would be amazed the money and the institutional money that is actually involved in some of these dexes. It's amazing. Okay, so as I mentioned, what you do with Uniswap is you provide liquidity as an investor, and for that providing a liquidity, in exchange, you get some portion of the exchange fees as a return. And sometimes it's in the tokens for the exchange, and sometimes it can be in other crypto as well. Okay, and this is kind of a more detailed breakdown. Don't really need to go into it. We do not have time, but I'll provide the slides if anybody's interested, and you can actually go in, and if you want to talk about it in detail, we certainly can. Okay, Compound is another platform that does a very similar thing, and it's a borrowing and lending platform. The thing that's really interesting about DeFi and crypto especially is there's no credit that's run. Like, nobody's saying, hey, your credit score 560, you can't borrow. It doesn't work like that. In crypto, every loan is over collateralized. So there's no risk in loss, because what happens is since you're over collateralized, sometimes up to 20%, if the crypto changes value and decreases, well, your 20% is used to actually absorb that loss, and anything beyond that creates a liquidation event, and then your position basically just gets sold. So I mean, that's good and bad, right? The good thing is if you're on the other side, you don't have to worry about necessarily losing money because of that, because the loan that you made in this particular case is over collateralized. Now, on the other side, however, you can lose money based upon these big movements in the underlying crypto. So it's just something to keep in mind. That's why a lot of people focus on more of the stable coins. And like I said, if you focus on the stable coins, you see DAI here. for the borrow is like 7%. And I actually think this is a little old. Realistically, depending on, I think Compound is paying like 5% now. So that means if you had $100,000 in DAI, at the end of the year, you'd have 105 for, and you're not getting anything close to that in the bank. Okay. Next is DAOs. And you know what? I don't have enough time to really go into them, but needless to say, all of these protocols have DAOs underneath them. These are distributed autonomous organizations. These DAOs are what dictate how the underlying exchange actually functions. And the cool thing is when you invest in these protocols, you get what's called governance tokens, which allow you to vote on how the exchange actually runs. So, I mean, I'm sure Bank of America or Wells Fargo is not letting you vote on how they actually do their business. But in crypto, there's an effort to be as decentralized and as fair across the board. So DAO's going to have tremendous application. You probably heard recently of this Lynx DAO that actually Stephen Curry invested in, and they actually bought a golf course. You're going to be seeing a lot more of these, not only in the financial space, but also in real estate as well. All right, let's keep it going. Now, I told you I was going to mention it, so I'm going to mention it. Everybody's favorite, NFTs. Now, I know some of you think they're just JPEG pictures that are worthless, and you might be right. But there are people making millions of dollars trading these. I'm not sure if you're aware of it. There's a couple of these larger projects. Bored Apes is one of them, where right now, currently, these pictures of apes are $230,000, $250,000 for just a JPEG picture that you could download off the internet. But they're fungible, meaning they cannot be changed. So there's some inherent value in it. I'll let you be the judge as to how much. Like I said, I'm still trying to catch up on that. Okay, something I really want to talk about though, and we're going to tie this into the passive income piece. The hottest thing in 2021 was this whole Rebase token DAO thing. Well, Olympus, the company at the bottom, they were like the kind of the originators of this. And in essence, what it is it's where you actually define a underlying treasury, and then you provide what they call rebases or rewards for people staking their crypto in your particular DAO. So I know this may sound a lot like a Ponzi, and I'm not saying it is or is not, but what I am saying is, if you look at some of these treasury values, like Olympus at this time was, I mean, we're talking the treasury value almost $500 million. So, and the market cap of almost $2.5 billion. So there's a lot of money going in and out of these DAOs. And what happens is they pay you these astronomical amounts for actually staking your crypto. So you see some of these are absolutely ridiculous. I mean, Olympus is 4,400%. Now, here's the thing. You see some of them that are over 100,000. It's great in theory. Unfortunately, it appears that for most of these, the model is not sustainable, and the underlying value of their particular tokens have started to collapse. So some of these projects are great. Get into them at your own risk. Like I said, I was involved in Olympus as well as Time Wonderland, but my motto is what? Take profits. So once I realized my initial investment, I took it out immediately and I let the rest run. So I'm not saying that's what you should do, but something to think about, particularly with these projects where the returns are absolutely astronomical. I can't imagine 1,000,000% return on anything, but it does happen. I mean, it'll happen for a while, but for how long is the question? Okay. And as I mentioned before, CryptoPunks is the other big NFT project. This slide should have been further up, but that's fine. and you see one single picture sold for $7.5 million. So there obviously is value. You know, how much, like I said, it's like art, it's in the eye of the beholder. Okay, now let's talk about the warnings real quick, and then we're gonna get into the good stuff and stuff you came for. Number one, I talked about rug pulls. This is a problem. And what a rug pull is when the developer of a coin or a token just pieces out with your money. It happens, unfortunately, more often than you would think. And just you cannot just use the size of a project or the liquidity in a project as an indicator as to whether or not a project is going to get rugged. That's the term, rugged or not. So there's really three primary types, and they're all bad. One, the developer yanks the liquidity, and I'll talk about how that works in a second. Two, they pump and dump. They dump their entire holding, and they crash the market while you're holding the bag. And lastly, in the smart contract, they write it in such a way that only they can sell and you can't. Is bad. And like I said, this happens more often than not. You see these Twitter posts over here. These were big projects that got rugged. I don't know if you guys remember when Netflix had Squid Game going on. Well, this Squid Game project was huge for a second, enormous. The price literally went from $2,800 to 4,000ths of a cent. Like, so it's the reason I cannot stress this enough. If you recognize profit, if you realize profit, you might want to think about getting it. Okay, so signs that you might get rugged. One, if the developer doesn't have their liquidity locked up, meaning the beauty of the blockchain is you can see who owns what at all times. It's visible to every crypto investor, either through eScan or BSC scan or whatever protocol you're on. There's an associated scanner for it. So you can go out and see for a project, okay, cool. 90% of the liquidity is owned by the developer, and he doesn't have it locked, which means as soon as I buy, he can sell the whole thing. So liquidity not being locked, or at least a good percentage, is a potential sign. Secondly, if you have a few huge holdings. So normally a good developer, what they'll do is they'll release most of their tokens or coins because they want them exchanged. They want the market to decide the value. But the unscrupulous ones, what they do is they actually do a couple of things that's really interesting. Sometimes what they do is they have a few big wallets and they break it up. And then other times what they do, and this is the one that's very hard. If you don't get anything else from this, understand this, because it's very difficult to detect. What will happen is they'll write the contract in a way where they say, okay, we're going to burn or remove 80% of all of the tokens from the market, meaning we'll burn them and they won't exist anymore. Okay, that's great. But they could still have a huge stake based upon that in their own wallets that you weren't aware of, because there was this much larger number of tokens at one time, and they just cut the amount of available tokens out. So now their stake is enormous. And then at that point, they do, they'll either dump them or, lock up liquidity or do something else. So, and then just a couple more things really quick. If you get make sure they got a third-party audit if they're a big project. And lastly, the good projects have what's called multi-sig wallets, which means multiple developers have to agree to do anything with the wallet before it gets done. So it doesn't necessarily protect you. I mean, it doesn't protect you fully, but it provides an additional layer, because then basically everybody that's in the project has to be involved in the rug pull. So that's enough on rug pulls. Next, and this is I can talk about this for an hour. Impermanent loss. In a nutshell, what it is when you provide liquidity to a pool, as I mentioned before with some of the earlier protocols, there's a risk, particularly if you're providing liquidity to a liquidity pool, that typically you provide a pair. So you would provide like a stable coin, like such as DAI or UTC, and you provide a more volatile coin, like time, for instance, right? But if the value of time drops dramatically in comparison to the other coin that you actually invested, then you get what's called an impermanent loss, and that difference is essentially taken out of the value of the liquidity that you added. Like I said, it's a kind of complex topic. It's something that we could certainly talk about, but it's one of these things where you need to understand it, particularly if you're investing in a liquidity pool and not just simply staking. All right. Oh man. Okay, we're good. Let's get into it now. Let's talk about crypto wallets, and then we're going to talk about actually getting into this. Okay. So there's really three types of wallets: there's software, hardware, and paper. As I mentioned earlier, you have this whole concept of exchange, non-custodial, meaning they hold Coinbase or Binance or Robinhood. They actually own the private keys. They actually hold your crypto for you. A lot of people get started that way. It's not necessarily a bad idea. For a lot of people, that's the on-ramp. Next is the whole mobile app, and crypto.com is it's a non-custodial too, but it kind of functions as a mobile app. And then Trust Wallet is another one that's it's a wallet that you control on your mobile device, typically on your phone. And then there's a whole nother group. The one we're going to talk about today is Metamask. You got Metamask, you got Phantom, you got TerraStation, and these are all for different protocols. Metamask is for Ethereum, which is by far the most popular. Okay, and now you got hardware wallets. If you are investing a lot of money relative to yourself, if you're investing a lot of money in crypto, please, please, please get a hardware wallet. Please do yourself a favor. All of these can be hacked. And the thing about it is all of these are, everything that's software is considered hot, which means if somebody hacks any of them, the crypto that you have is at risk. With a hardware wallet, what you're able to do is you're able to actually transfer the crypto onto the wallet itself, onto the hardware, and then disconnect it from the internet. So no one can actually hack it at that point because there's no entry. And then of course you can always do, believe it or not, you can actually print out your wallet and like put it in a safe deposit box. It's another way to go. And essentially the wallet is represented by your public and private key. So if you want to buy Bitcoin and you don't want to look at it for 10 years, you can always do a paper wallet. It does happen. Okay. All right. And then this Metamask, super easy. Metamask has made DeFi so simple. It's a Chrome and Brave extension. So all you need to do is go to metamask.io. It'll say download. You click it, and from there, what it will allow you to actually do is install that extension into your Chrome browser. And I'm going to actually show you guys. I'm going to do a demo live. Let me see. All right, let's do this. Okay. Can you guys still see my screen? I bet you can. Let's do a new share. Let's just do the desktop.
It's just white right now.
Yep, no problem. All right, because I'm going to show you what it actually, and by the way, I like to use the Brave browser because Brave is actually a stripped down version of Chrome with a lot more security policies kind of baked in. So, okay, so what would happen is in this particular case, we would go to MetaMask.io. So you would click here, you would click whatever version you want. In our particular case, we want Chrome. And that's it. Like literally, you click install MetaMask and that's it. In fact, since I already have it installed, it's probably going to just show, yeah, remove. And what you get for it is this. Although, because I rebooted my machine, hang on one second. I got to stop the share for a second because I got to get my password. Hang on one second. And here's the other thing. With any of these software wallets, I cannot stress this enough. you will get a recovery phrase, which is normally about 12 words. Write it down, put it in your keychain, put it in a safe, do something with it, because if you lose it, all the crypto that you have in that wallet is gone. I mean, well, it's not gone, it's still there, but you will not be able to recover it. So the reason I'm saying this is because this has actually happened to me on several occasions. I have one where I know I have at least 2 Bitcoin just sitting that I can't get in. Like there's no way. So these private keys are super secure. So just, and as a matter of fact, I did it again late last year, but it was only half an ETH, so I didn't feel as bad. Oh, here's the other thing too. Here's another tip. If you're transferring, anytime you're transferring crypto, you always want to make sure you do 2 transactions, a small one first and then a larger one. The reason for that is just in case you send crypto to the wrong address, you want to make sure you don't send the whole thing. You want to make sure it's, you know, if it's a mistake, you want that mistake to be small, right? So let's see here. All right, here we go. Let me go back to my Zoom, share screen. Okay. All right, so now you guys can see my screen and you guys can see yourselves too. Okay, so what happens is in this particular demo account, I have 1 BNB, which is actually whatever BNB is trading for now. So the cool thing about MetaMask is that a lot of these web apps will tie into MetaMask automatically. There's not a whole lot you need to do with it. So let's say, for instance, we want to go to Unitswap. I can click connect wallet. I can connect MetaMask. Oh, I'm on the wrong network. Hang on one second. Sorry about that. And this is the other thing too. Let me point this out. MetaMask allows you to use multiple different blockchains. So in this particular case, Uniswap uses the Ethereum blockchain. So I'm going to select Ethereum here, which I don't have any Ethereum in this account, but I can still show you. So now you'll notice that I have this hash here and that I am connected. So typically what happens is, let's say I wanted to trade Ethereum for, I don't know, let's say DAI. Okay. So what I would do here is I would say, okay, great. I guess there's 137 in one of these wallets. Transfer this into DAI and they're going to charge me this fee. Oh, the other thing. Anytime you're making a transaction on the Ethereum blockchain, you're going to pay what's called gas. And gas is ridiculous for Ethereum right now. It's super high. It's to the point where a lot of blockchains, a lot of folks are moving away from Ethereum just based on this exorbitant fee. So imagine it's $137. They're going to charge me $52 to exchange this Ethereum for this DAI. It's ridiculous. So that's why, like I said, there's a lot of new blockchains on the horizon. A lot of folks are now moving away from using Ethereum for their protocols, but there's still like a bunch of Ethereum out there and there's still a lot of folks still using it. So yeah, that is what it is. But okay, so let me jump back to my prezo for a second here. Stop sharing. Okay. Current slide, here we go. Okay, so now let's talk passive income. Why you guys came. There's 2 projects I'm gonna talk about here, but there's a bunch. And like I said, don't invest in these projects because I'm telling you to. These are projects I have invested in and taken profits from. It may be too late for you. I don't know. I'm not saying that it is or is not the case, just so you know. Okay, first one is AAVE. AAVE is where I got started. AAVE is, what I like about AAVE is AAVE is big in terms of liquidity and total assets under value. AAVE supports both Ethereum and Polygon blockchains, which I really like. Polygon, the fees, like we mentioned earlier, they're a fraction of what Ethereum, I got Ethereum spelled wrong too. They're a fraction of what the Ethereum fees are. And that's why a lot of people are moving away from Ethereum, like I said. Pays out in Matic, which is fine. It's their own token, and that token has actually been relatively stable. And you can, at any point you want, just go to one of those dexes like I showed you, like Uniswap, and you can actually exchange the token that they give you for USDC or USDT or DAI or whatever you want. And the other thing that I really like about AAVE is AAVE supports what's called flash loans. Flash loans are amazing. You can borrow $10 million of crypto with a flash loan, without a credit check, without anything. Now here's the rub though. You have to borrow it in a smart contract transaction, and you borrow it for 10 seconds. Like, that's like the limit. So what happens is if you know how to do arbitrage between different dexes, different exchanges, you can say, hey, AAVE, I want to actually buy 100,000 DAI from Uniswap, and I want to go to AAVE, and I want to go to SushiSwap, and I want to do the arbitrage between the two. With flash loans, you can do that. There are people making big money doing it. It's not easy, but if you have a proclivity as an engineer or as a software developer, something you should definitely think about. Like I said, AAVE is great if you want to stake stable coins as well. So I like AAVE, AAVE.com. You should definitely check it out. You know, particularly if you're just holding crypto and you're not doing anything with it, you might want to check out AAVE. Okay, now TANO is a completely different animal. You recall earlier I was telling you guys about this whole Rebase DAO thing. Well, TANO is kind of that on steroids. It is not only a Rebase platform, but it should be auto staking, by the way, not stacking. So what that means is typically with a lot of these protocols, you buy their token and then you go to their platform and you stake, or you give them the tokens that you bought. TANO's different. TANO, the way that contract is written, it auto stakes, which means as soon as you buy it, you're staking it. And that's good and bad, right? It's good in that there's no additional fee for actually staking it, because anything that you do on the blockchain, I don't care what it is, there's going to be a small fee associated with it. And since TANO auto stakes, you also get your rewards automatically as well. However, that API that you're looking at is correct. It's 102,000%. How sustainable that is, I have no idea. But you'll notice, this is a Facebook post that I put up. I got into TANO when TANO was 3 cents. TANO went all the way up to 20 cents. So, you know, you can do the math. But because I do what? Take profits. Once it hit 20, I had to start selling. So it hit 20 and pulled back. It's around 11 cents now. So the good thing is because this API is so high, the rebases happen almost continuously. Every 30 minutes, in this particular case, let's say you had 102,000 DAI. I mean, let's say at 100,000 TANO, excuse me. You're gonna rebase at about 30 TANO every 30 minutes, roughly. So you see at 11 cents, I mean, what does that end up, you know, coming out to? It's 48. Let's do the math. I mean, you could very easily make $200-300 a day. Hang on one second here. $200-300 a day staking TANO right now. Now, like I said, is it risky? Yeah. Can you lose your money? Yeah, definitely. But, you know, it's like anything. You have to make a determination as to whether or not, you know, the juice is worth the squeeze. All right, let's see here. So if we're talking just 100,000, let's see, 30 times 48 times, that's $158 on essentially 11 grand. So, and if you time that times 30, that's $4,700 a month. Like I said, I've been in this project for a month. I've already taken my profits. I'm not telling you to buy it. I'm saying that these type of passive returns are easy. They're easy. There's a bunch of projects out there that are doing this and better. So If you have any specific questions about TANO or any other projects, we can talk offline for sure. But like I said, this is an easy state. This project, even after all of the big DAOs pull back, this one held its value, which is always a good sign. Like I said, on my Facebook page, I normally will post if I see something that I think is worth taking a look at. But like I said, none of this is investment advice at all. But I have a pretty substantial stake in TANO still, and I make pretty good daily returns on it. But like I said, I am concerned about it, so I'm constantly taking profits off of it, and I recommend that you do the same thing. Okay, now we're gonna just go through some resources because I want to get to the questions, and I'm sure I'm looking at the chat. There's a bunch of them. I haven't even had a chance to take a look, but okay. CoinMarketCap is your friend. You're going to be checking crypto if you're like me and you're insane, like 1 million times a day. You're going to be checking the coins that you hold, the coins you don't hold, the governance tokens, the whole shot. I love coinmarketcap.com. I have the app on my phone. You might want to get it. DeFi Pulse is another one. If you want to look at these different decentralized apps, some of them I mentioned earlier, and see who's doing what, when, DeFi Pulse, another great website. DAT Radar is another one, very similar. DeFi Llama is kind of the portal to DeFi. You can see not only how much value is locked up in every chain, but you can also drill down into NFTs and airdrops and the whole shot. I love DeFi Llama. Definitely want to get that one in your mix. If you want to do NFTs, remember I talked about these monkeys? You know what? Let's do this real quick. Remember I was telling you about these NFTs? Well, you see this floor price right here of 78. This is 78 Ethereum. So what is Ethereum trading for right now? Well, let's have a look. See. Okay, so Ethereum's trading for 32.47. So 32.47 times 78, $253,000. So the cheapest picture of a monkey that you can buy right now is $253,000. Yeah, I'm in the wrong line of work for sure. All right. If you're interested, I listen to Modern Finance podcasts. Kevin Rose has been the guy for years. He's old now, but he still has his finger on the pulse on a lot of DeFi and crypto stuff. And oh, okay, let's get into it. Lastly, there's a bunch of hype. Some of you guys probably heard about the whole crypto winter that happened, and a lot of people got wiped out who didn't take profits. So once again, there may be a bubble happening, don't know, but if you manage your investments, take your profits, you'll make it. Okay, but with that, let me do this. I'm gonna put this poll up right now, and I'm gonna look in the chat and start taking some questions. Hang on 1 second here. Let me stop sharing. And can you guys see my poll? Great. Okay. And I'm going to hit the chat. I definitely need somebody to help me out next time for sure. All right. I'm just going through, see if there's any questions. Can't see it. Great. All right. All right. Down. Guy sold selfies. Oh yeah, I heard about that guy that sold the pictures of the selfies of himself. I wish I was, maybe I'm not handsome enough. I don't know. Let's see. Hard wallets, skill. Wallets too, guy. Yeah. You be careful with your wallets. That's the only thing I can tell you. Let me see. I'm gonna unmute. If you got any questions, go ahead and fire away.
Okay, I have a question. Hi, Travis. How are you?
I'm fine. How are you?
I'm good. Thank you so much for this presentation. My question is, when it comes to the passive income platforms, I know you just kind of gave us two, and you said there are like many other ones out there that are pretty good. Can you give us like in a brief form, what's a good way for us to go out and look at finding some of those other passive platforms and sort of understanding like, okay, how do we determine what is good versus some of the ones that might be a little bit more riskier?
Yeah, I would say for a lot of these platforms, and this is almost counterintuitive, but the earlier you get in, the better. It seems like once something becomes really popular, particularly a lot of these platforms that are kind of based upon liquidity coming in, returns end up drying up, and then the price of the underlying tokens that this platform provides end up decreasing in value. So I would say first thing, you want to be early-ish, and in the crypto space, early-ish is probably the first 3-4 months. Now, with that being said, there are some projects that have been going a while that are still like relatively decent, but the projects I'm always concerned about are those that require you to stake and then you cannot unstake your crypto. So because there's a risk there. There are projects where you essentially, like Faucet, for instance, Drip. Drip provides a 1% return. If you guys are interested, it's called Drip Network. You can actually stake Drip, but unfortunately, the money you stake, you can never pull back out. So let's say you put 10 grand in, great, then you would make $100 a day. And that's how that would work. But it's going to take you, 3.5 months to actually get your initial investment back before you actually start seeing any profit. So for me, I'm normally not comfortable with those types of projects. Some people are. It would really depend though. And the other thing is, I would say, is I go to DeFi Llama and I want to see the assets that are locked up. I want to see that going up. If I see it going down, that's normally a problem, right? That means people are less interested in the projects. And because they're less interested in the projects, then there's a good chance that the value of the underlying tokens that they're providing is going to go down. So like I said, I use DeFi Llama all the time. Yeah, and then of course, the last thing is I always look for third-party audits. A lot of them aren't worth much, but to me, the other thing, I want the development team to be doxed. Is the other thing. You have some of these projects where you don't know who's doing what. Now, these guys are anonymous. Are they going to steal your money? Maybe. I can tell you, I got rugged on a project about 3 weeks ago. But it was like $500. I wasn't really. Some of these you just got to take your shot, and you just understand that, okay, we're gonna get rugged. So this particular project, I actually, before I was just about to actually get my initial investment out when they locked selling on the actual project. They just locked it. But before that, it was it was great. But I was compounding, thinking I could get to a point where I could get my initial return back faster, and that was my mistake. I hope that answers your question.
Guys, for the people out there, say there's beginners out there, and I was one of them, like, crypto's stupid. I can't understand it. I'm going to say one thing. The printing press was a disruptor. The internet was a disruptor. The cell phone was a disruptor. Crypto is the next disruptor. And who says this? Gary Vaynerchuk. And he also said about NFTs? Follow Gary Vaynerchuk on Instagram. He's a genius. He does 30-second videos because this person's attention span can only hold 30-second videos nowadays because of his stupid phone and everything that's going on in the world. He just did one on NFTs. He said he showed a 1990 video about the internet in 1994, like people complaining about it, how it was the next thing and whatever. Then he said in the early 2000s about NFTs, he said in 10 years from now, everybody here will own an NFT.
Oh, definitely.
Said, and especially the people saying it's stupid, it's dumb, and they're going to learn, you guys are going to wait and learn about it later. And in your own one, it might not be too late. But so what I'm trying to say is don't do it on your own. If you don't understand it, learn from somebody like Travis if you want to learn a little bit. It's just like multifamily education, investing in yourself. If you want to learn a bit, don't be afraid to spend a few dollars to learn about crypto and stuff like that. You could buy books, you can do free podcasts. Eventually, when you really want to learn, you got to reach out to people who know. The best way is to look at, there's crypto chats, there's other things. We have one established, there's other ones. There's a lot of them. And right, Travis, what's your recommendation if somebody wants to learn and not be discouraged? Hey. There you go. That's your recommendation.
Hey.
Take profits or don't.
Hey, I live by this.
Mm-hmm.
I cannot stress this enough. I know some of you are tired of hearing me say it, but I don't care. Let's be clear. I don't care. This is for your benefit. This comes from years, decades of losing money. And I'll tell you, it's as soon as I learned this lesson, everything changed. So I will tell you right now, with crypto especially, you'll have some people that'll say, "Oh no, I'm just gonna hodl." Man, I don't want to curse, so I'm not. Hodling is nonsense. I'm just gonna say it. You don't hodl. I believe Mikey T posted something. Was it day before yesterday, Mikey? To the effect that Sam Zell said, and I'm gonna butcher the quote, but if you wouldn't buy it at its current price, why would you hold it at its current price? Same thing. So there's really no difference in this. So, you know, feel free to get started. Feel free to you know, install MetaMask and start kind of messing around with it. For most of you, the best on-ramp is going to be like a Coinbase. You'll go to Coinbase and you'll transfer a small bit of crypto from your Coinbase wallet to your MetaMask wallet. You know, and I can show you how to do that. There's a bunch of videos on how to do that on YouTube as well. And then from there, you look at projects, you read white papers, and then ultimately you kind of have to take the leap. I would say just make sure you don't invest money that you need. And oh, there is one other question, and that was around other layer ones. I love Avalanche. I think Avalanche is going to be gigantic. I was big on Polygon for a while, but I'm not as big now. And I think Solana has a lot of juice too. So I like Binance Smart Chain still. I like the fact that it's so much like Ethereum. It's very easy to write contracts against, but at the same time, you know, it suffers from some of the same issues that Ethereum does. So, any other questions? Let me see. Oh, it's awesome. What does crypto winter mean? Oh, crypto winter. Crypto winter was 2.5 years ago. This is when the price of the entire crypto market like crashed 85%, like the entire market. So there was a huge hype cycle around Bitcoin, and not so much Ethereum, but Bitcoin and Litecoin and some other coins, and they spiked up pretty significantly, well over 10,000, and then they just crashed, and they stayed crashed for a while. So it really wasn't until like DeFi and Ethereum, the rise of Ethereum really pulled the entire market up. So yeah, crypto winter can happen again. I hope it doesn't. I mean, particularly right now, but that's why I like DeFi so much for passive income, because you don't have to necessarily be right about a coin going up. You can actually stake and actually get yield like an investor, as opposed to like somebody that's day trading or speculating. I mean, this is all speculation, but as opposed to speculating that the price of one token or another is going to go up. And you know, anytime I can figure out an arbitrage, or I can figure out how to capture yield with minimal risk, I'm all for it. Let me see what else we got. Any other questions? Okay, then I'm gonna stop the share, and that's it, folks. Thank you for your time. I appreciate it. Thank you for taking my poll, and thank you for taking, you know, part of your evening to hang out with me. I hope you got something from it. I know I covered a whole lot. If you got any other questions, please feel free to reach out. You can hit me on Facebook if you're on Facebook as well. You got my email, you got my Discord. One thing I
want to say for the people who want to start out with Coinbase. And then if it interests you and you want to learn more, I don't know anything about NFTs. I'm getting taught by these guys. You know, I don't have to go watch podcasts. I have these guys. I have Travis, I have Joshua Stahl, I have John Beatty, who's a master, and Brian Mullen. I have those four guys. Whatever I need to, you know, I network with them. I add value to them, and they're adding value to me. So if you're interested, start Coinbase, start out slow, and then find out people, become friends with people in the space. You know, somebody like a Travis, you know, and learn. It's something good to learn for the future. No, I'm not saying you have to invest a lot. It's something good to know about, especially when you're at meetups for multifamily. they're not just talking multifamily meetups nowadays, guys. So you want to kind of know a little bit, because you're sitting in a group and they're all talking about deals, and all of a sudden they're talking about crypto. If you don't know a little bit about it, you're just gonna sit and go, and you're not gonna be in the conversation.
Yep.
So that's why there's a lot more behind than just learning to invest. It's learning to be involved. You're in multifamily, crypto's out there big time, and that's what they're talking about. So you always want to be up and up. And we talked about Travis, crypto, they're going to be able to, title company's going to be gone, instant transactions. Closing's going to be like, boom, done over the blockchain. So we were talking about making a coin too for that, people are doing, so there's so much more. This is just, I don't know, what's it, 3% of the 5% of population, or 3% of population in crypto?
Yeah, it's tiny. And here's the other thing too, and I mentioned it in my poll. We're starting a friends and family crypto club. I'm not selling anything. There won't be any courses. I'm not gonna bug the crap out of you and spam you or anything like that. It's not what I'm into. You can find somebody else to do that. But what I am interested in is finding like-minded folks that are interested in investing and working together to generate passive income for each other.
So here's, guys, for the people out there, say there's beginners out there, and I was one of them, like, crypto's stupid. I can't understand it. I'm going to say one thing. The printing press was a disruptor. The internet was a disruptor. The cell phone was a disruptor. Crypto is the next disruptor. And who says this? Gary Vaynerchuk. And you know what he also said about NFTs? Follow Gary Vaynerchuk on Instagram. He's a genius. He does 30-second videos because this person's attention span can only hold 30-second videos nowadays because of his stupid phone and everything that's going on in the world. He just did one on NFTs. He said he showed a 1990 video about the internet in 1994, like people complain about it, how it was the next thing and whatever. Then he said in the early 2000s about NFTs, he said in 10 years from now, everybody here will own an NFT.
Oh, definitely.
Said, and especially the people saying it's stupid, it's dumb, and they're going to learn, you guys are going to wait and learn about it later. And your own one, it might not be too late, but so what I'm trying to say is don't do it on your own. If you don't understand it, learn from somebody like Travis. If you want to learn a little bit, it's just like multifamily education, investing in yourself. If you want to learn a bit, don't be afraid to spend a few dollars to learn about crypto and stuff like that. You could buy books, you could do free podcasts. Eventually, when you really want to learn, you got to reach out to people who know. The best way is to look at, there's crypto chats, there's other things. We have one established, there's other ones, there's a lot of them. And right, Travis, what's your recommendation if somebody wants to learn and not be discouraged? Hey, there you go. That's your recommendation.
Hey,
take profits or don't.
Hey, I live by this. I cannot stress this enough. I know some of you are tired of hearing me say it, but I don't care. Let's be clear. I don't care. This is for your benefit. This comes from years, decades of losing money. And I'll tell you, as soon as I learned this lesson, everything changed. So I will tell you right now, with crypto especially, you'll have some people that'll say, "Oh no, I'm just gonna hodl." Man, I don't want to curse, so I'm not. Hodling is nonsense. I'm just gonna say it. You don't hodl. I believe Mikey T posted something. Was it day before yesterday, Mikey? To the effect that Sam Zell said, and I'm gonna butcher the quote, but if you wouldn't buy it at its current price, why would you hold it at its current price? Same thing. So there's really no difference in this. So, feel free to get started. Feel free to install MetaMask and start kind of messing around with it. For most of you, the best on-ramp is going to be like a Coinbase. You'll go to Coinbase and you'll transfer a small bit of crypto from your Coinbase wallet to your MetaMask wallet. And I can show you how to do that. There's a bunch of videos on how to do that on YouTube as well. And then from there, you look at projects, you read white papers, and then ultimately you kind of have to take the leap. I would say just make sure you don't invest money that you need. There's one other question, and that was around other layer ones. I love Avalanche. I think Avalanche is going to be gigantic. I was big on Polygon for a while, but I'm not as big now. And I think Solana has a lot of juice too. So I like Binance Smart Chain still. I like the fact that it's so much like Ethereum. It's very easy to write contracts against, but at the same time, it suffers from some of the same issues that Ethereum does. So, any other questions? Let me see. Oh, it's awesome. What does crypto winter mean? Oh, crypto winter. Crypto winter was 2.5 years ago. This is when the price of the entire crypto market like crashed 85%, like the entire market. So there was a huge hype cycle around Bitcoin, and not so much Ethereum, but Bitcoin and Litecoin and some other coins, and they spiked up pretty significantly, well over 10,000, and then they just crashed, and they stayed crashed for a while. So it really wasn't until like DeFi and Ethereum, the rise of Ethereum really pulled the entire market up. So yeah, crypto winter can happen again. I hope it doesn't. I mean, particularly right now, but that's why I like DeFi so much for passive income, because you don't have to necessarily be right about a coin going up. You can actually stake and actually get yield like an investor, as opposed to like somebody that's day trading or speculating. I mean, this is all speculation, but as opposed to speculating that the price of one token or another is going to go up. And anytime I can figure out an arbitrage, or I can figure out how to capture yield with minimal risk, I'm all for it. Let me see what else we got. Any other questions? Okay, then I'm gonna stop the share, and that's it, folks. Thank you for your time. I appreciate it. Thank you for taking my poll, and thank you for taking part of your evening to hang out with me. I hope you got something from it. I know I covered a whole lot. If you got any other questions, please feel free to reach out. You can hit me on Facebook if you're on Facebook as well. You got my email.
Big picture. But anyway, guys, thank you for coming. Travis, you want to say any last things? Or
thank you for your time. Hopefully I didn't scare you too much. There's a lot of opportunity in crypto. Like I said, like Marco said earlier, feel free to reach out to me. Like I said, for the folks that are interested in the crypto club, I'm going to reach out to you, and let's make it happen.